In this video, let's learn how to use the Commodity Channel Index, also known as the CCI indicator, to identify market breakouts. What's going on, everybody? We are back with TradeUI, and in this video we're going to go over an awesome indicator known as the CCI indicator, or also known as the Commodity Channel Index. What this indicator does is it helps us track momentum very similarly to the stochastic oscillator. However, what this does is it's actually unbound. Therefore, the actual movement can go technically to infinity or below infinity. Usually you want to see what's going on around the positive 100 to the negative 100 mark. But what you can utilize this for is to identify, hey, if the stock is trading at a certain level and is testing a level, but the CCI number is getting closer to that 100 or above 100, you could see a continuation in bullish momentum and a breakout to the upside. But besides me just sitting around here talking about it every day, how about I show you how we can utilize that in real time? So what I want to show you here is first TradeUI site. I want to make sure you click that link in the description below to join TradeUI. And what you can do is you can go down to backtesting strategies and you can go to AI strategies. Well, what we want to do is we want to look for the CCI bullish setup, which is in all these strategies here. I believe there's 106 strategies to choose from. And then we're going to do stock closes 2% up on the next day. What that does is that helps us identify when there's a CCI breakout because the stock price is expected to break out. Then what we do is we go down to our backtesting strategies and we get results of every ticker and the effective win rate and the number of trades taken to identify how powerful that strategy is for that particular stock. That way, after you understand how to use the CCI indicator, you might realize what stocks work the best with it. Now be careful because you might see a win rate of 100%, but there's only 3 trades taken. That's not enough data to take a trade. Realistically, you want to see anything over 20, 30 trades to really understand that this is a powerful intuition that this CCI indicator will be effective. So there's a couple of stocks here. I see INTU, SAIC, and ZG. So let's start with INTU and go to the charts. So if I go over here, I'm going to do INTU. And I already have my indicator pulled up down here. What I did is I went to studies, I went to edit studies, and all you gotta do is type in CCI, and it's gonna be this one right here. You double click it, it'll add to the lower band, click apply, and you'll see it down here on the chart. So there's 3 different things we want to look at the CCI down here. There's 3 lines. There you have the lower negative 100, you have the average 0, and then you have the positive 100. So the stock is going to trade up or down regarding reference point using the 0. If it's anything above 0, that's technically bullish momentum. Anything below 0 is technically negative momentum. Remember, you want to ride that momentum, and you want to make sure you're riding momentum when you have a big pop to the upside or pop to the downside if you're bearish. In this case, we're looking for bullish opportunities. So what we like to do is we like to find when the CCI number breaks 100, and at the same time, the stock price is testing a support zone or resistance zone. So what I want to do is first I want to draw some lines. So we're going to look at the chart and draw some rough lines. And I'm just picking where I see some highs and lows touching each other. I see a little bit right here. And you could argue right here too. Alright, so do this one and call it a day. Now remember, this is a year-to-date chart, so you really want to be careful about drawing too many lines. However, you just want to identify where there's been some highs and lows and where the zones have been in the past. So let's start at the beginning right here. So you can see that on the chart, we tested this 460 zone, and if you look right here at the CCI, when it crosses the 100 line right here, you see the 100 point right here, that white line crosses above, and at the same time, the stock's breaking out of an actual resistance zone, verifying that there's going to be a continuation to the upside. How much of a continuation? We don't know. Honestly, as traders, we have no idea how high the stock can go. We do know, though, it is going to go higher the next day based on our back-tested data. So you can verify that it's going to go higher. You can run a small stop right here about halfway down, and then you can target 2 to 3% to the upside every single time. And as you can see, this stock ran from $460 all the way up to $500 before finding any sell-off resistance. And then it works again hand over hand. You see where you had a breakout right here, but technically the resistance zone would be up here, not right here. So if I move this up a little bit, you can see that when we broke out right here, we didn't confirm it completely right here. It did close, and that would have faked you out. If you ran a tight stop, you would have been saved here, but that shows that doesn't work every single time. But if you go to right here, remember this is our resistance zone. Technically you could argue it's right here since that was the highest top. It broke out right here and it continued upwards. So we're 2 for 3 right now, and our moves to the upside have been a lot bigger than our moves to the downside. So that tells us if you run a tight stop on this setup, you can see some awesome gains. Let's see here. So now you kind of have to pivot this line again. Remember, we're just kind of sharing this line to identify a support zone right here. And if we see a breakout to the upside right here, you could take this trade arguing that this was a short-term support zone. However, it's not very clear that this is an area where we had a strong resistance level to break the price. The fact that we finally did showed there was a continuation in the next few days. But over here, the reason we're identifying this zone is we had our breakout right here. I'm sorry, this is on this gap right here, so you actually would not look at this one. Let's see, right here though, what we have is we're at a support zone, and you can argue there's a tight little channel right here trading because we touched it a few times and rejected right here, touched again, rejected. But we had our breakout. We had one breakout right here, which was a huge move in one day. It looks like it was an earnings report. So if you avoid playing earnings, you got to keep your eye that that's going on there. But you can see where we broke out right here. Again, we broke out past the zone and continued on higher. And as we continue, it's the same thing over and over again, guys. The second the CCI breaks up, if you're close to some type of support resistance zone area, that tells you, hey, we're about to verify an upward trend. One more time right here, you can see where the price broke out, and technically the next day it did close higher. Remember, we're tracking the actual win rate of this data right here, telling us INTU 87% of the time moves 10% higher the next day, and the number of trades, moves 2% higher the next day, and that was a course of over 38 trades. Now if we look at ZG, we'll see what the chart looks like for that. So I go to ZG up here. Alright, so remember the first thing we want to do is identify some key levels. Not edit studies, let's see here. Alright, the reason we're identifying this break is because we popped up really high, consolidated, and broke out again. And then let's do, let me actually show you how really powerful this is. Let's imagine we don't have this data right here. So we can only see this section right here. Alright, popped up right here, continued higher the next day, as you can see, went all the way up from $44.30 all the way up to nearly $46. Right here it came back down and technically popped right back up. Personally wouldn't trade that because we didn't really go back deep below the 100 level. We kind of just stay at the 100 level, and I don't like following that much momentum. What I like to do is just see that breakout above 100 and take the trade. So right here we had a huge candle, broke out, next day kept going. So you could have held it, you still would have been in, and then the next day you really would have profited. Right here you had a breakout to the upside, big position, big win right there. As you can see, the next day it closed up at $50 when you would have entered at $48. $48. That would have been $2 per share. And then again right here, it looks like there was some news that just had a gap up, and that gap actually confirmed to continue, which realistically, got to be cautious about gap ups because gaps want to fill back, right? What you really want to see is when the stock's trading sideways for a while, and then it pops up, even right here. It popped up, and the next day it closed higher. So you would have profited on this trade here. And you can see right here, it popped up, next day closed higher, would have got out. So every time it pops above this line here, you want to see if the stock's trading in a tight channel, and then that's going to tell you that, hey, looks like the price expected to close higher the next day or two. But let's go to where we see some more popping up. Looks like right here's a good opportunity to where we're trading sideways, we're consolidating and really squeezing, and all of a sudden, bam, bullish momentum popping over 100. If you can see right here, looks like it was on this candle. Technically, you got in on this day, you would have targeted 39.1. The next day, you would have made a small profit right then. You would have noticed this big pop and got in towards the bottom of this candle, and then realized, hey, I would have made a nice profit here. Let's see, right here, we had the indication on this day right here, target the next day or two, and you could have made up to $42. One more time, it came back down. Probably wouldn't have traded this because it came down and immediately came back up. That's a little bit tight for me. So is this one. However, you can see every time we do cross above 100, the next day tends to profit. Just like it is right here, the next day tends to profit. So most of these trades are showing profits. Every single time you buy this day, you sell the next day, you profit. Even technically right here was an earnings gap, so we can't really count that because all that is just crazy earnings days. You've really got to avoid technical analysis on earnings days because that throws everything out of whack. And then let's see. Right here we had our cross in between these 2 days, so into this day, beginning of this day, so you technically would have got in here at that confirmation, and then you would have targeted, you still would have profited a little bit here because the stock opened around this price and then closed around this price. And then lastly right here, it popped up one time and then it came back a little bit, but you would have saw that and you would have made a little bit of profit, especially if you're targeting that 2% for trade. Based on what our back tested data shows here, that would have given you a dozen opportunities to make 2% the next day on these trades. Some you had to hold a little bit longer, but as long as you keep your tight stop and manage your money appropriately, you could see great ways you can make money, guys. But you have to understand that there's a lot of risk when it comes to using any kind of technical analysis. But when you have back-tested data, it will help you verify if your strategy is valid or not. But don't just rely just on a technical indicator. Technical indicators are great for identifying when it's a great time to potentially buy a stock. However, drawing support and resistance lines, they'll tell you how long that stock could run and how much profit you could potentially make, and also how much risk to the downside you're exposed to. So if we go back to our chart and we look at this one again, show you a prime example. So the CCI popped right here. We had a huge pop and you would have bought in, and you would have held, if you would have held a stop at the close of this, at the bottom of the candle that you identified, you noticed that that would have been your entry point. Technically, there's no resistance till this $44 mark because you had a little support here from the past, a little bit of resistance. So you could have targeted $44, and as you can see, the stock went right up to $44 over the course of that month when it was first indicated right here. So that was a huge trade that you could have captured only because you identified when it was a time to get in and you ran a tight stop. Always run a stop that is at or a little bit bigger than the candle spike that happened. So, an example right here, you would have got in, your stop would have been right below the candle, maybe at the top of this gap since it was a gap up. But if we look at a different example, if we look right here, you can see where the stop would save you, because if you would have got in on this candle right here where we had our breakout, you would have identified a stop of right here, and as you can see, it would have saved you a big loss to the downside where you could have captured again right here on a quick move to the upside. So rule of thumb is set a target profit you have in mind, but remember support and resistance is important if you want to try to capture longer term trades. Remember that the back tested data we have over here, we set this up for next day. What's the probability? So as you can see for that stock, the next day, 86% of the time, we had a profit. Now, is it going to hold that for a week, 2 weeks, 3 weeks? No, not with this particular data. You have to alter your hold periods to really understand that. And that's going to be changing it to 4 weeks or maybe 3% after 7 days. What that does is that really affects it to where if you look, technically there's no powerful back-tested data for that setting there. However, if you go to 2%, not 1%, if you go to 2%, what this does is it shows you what technical indicators have a second day response. So what that means is, hey, the CCI usually gives a second day positive response to INTU, SAIC, ZG, Z, CCEP. All these stocks with a lot of trades to back them up. Now, I know 36 to 35 trades may not be a lot for a lot of people. However, as you get used to tracking backtested data and seeing the results, you start to understand that if you flip a coin 35 times and if you manage your money appropriately and you're right half of that 35 times, if you give yourself a reward of 2% and you set a stop loss at 1%, you're still going to make money. So if you have proper money management, have the right backtested data, and understand how to use the technical indicators, you can give yourself a trading edge. But guys, we're going to end the video here. I hope you learned a lot about the CCI indicator and how to use it in your next trading setup.